Okay, so you've probably heard bits and pieces about student loan repayment plans changing again. It feels like the ground is constantly shifting,
It
right?
really does, especially with
Yeah.
these income-driven plans.
Exactly. And we know you've shared information about this, maybe feeling a bit lost. So, our mission today in this deep dive is to really make sense of the latest updates from the Department of Education.
Yeah, particularly what they mean for anyone trying to navigate income-driven repayment and, potential loan forgiveness down the line.
There have been some, well, significant moves, especially around how these IDR plans are processed and even how spousal information gets factored in. It's confusing stuff.
Absolutely. We want to cut through that confusion today.
So let's try and map it out clearly, give you reliable information.
That's the goal. Clarity.
Now, before we jump into the details, we want to give a quick shout out to Stonefly. They're the ones making this deep dive possible.
Right.
They specialize in IT infrastructure solutions. Think high performance options for cloud, storage, backup, disaster recovery, even hyperconverged
A
systems.
whole range of important stuff for businesses.
Exactly. And a big focus for them is data protection, accessibility, and availability, keeping data safe and easy to get to.
Which honestly, in today's world, whether it's loan info or company data, that kind of security and access is just critical.
Couldn't agree more. Having reliable systems is key.
Definitely. Stonefly offers comprehensive solutions for that, covering a lot of ground.
Okay, so let's tackle the big one first. The Save VE plan. That seems to be where a lot of the recent turbulence started. What's the latest there?
You're right, that's been front and center.
Right.
So back in February, there was a court ruling aimed specifically at SAVE, and following that, the Department of Education, they basically hit pause
Pause on what exactly?
on processing all income-driven repayment plan applications. Not just SAVE, but everything. ICR, IBR, PYE, the whole lot.
Wow. Okay. So if you'd applied for any of those plans, your application just stopped moving.
Pretty much, yeah. Things just halted. And looking forward, the department has basically said they expect the SAV plan itself to be fully blocked by the courts relatively soon.
Fully blocked. What term did they use?
They said enjoined in its entirety. That's the legal term. Essentially stopped completely.
Okay. Enjoined in its entirety. Sounds final.
Sure.
What about people already on the Save VE plan? What happens to them now?
Good question. So for borrowers already enrolled in SAVE and who are currently in this administrative forbearance because of the legal challenge.
The ones not making payments right now.
Exactly. The expectation is they'll likely stay in that forbearance for now. No payments due, and importantly, no interest accruing either.
Okay. No payments, no interest. Sounds okay on the surface, but I sense a but coming.
There is a big but, a really crucial point here. This specific forbearance period, the one tied to the SAVE plan legal issues,
Yeah.
will not count toward loan forgiveness.
So not for IDR forgiveness or public service loan forgiveness.
Correct. It counts for neither. So yes, you get a temporary break from payments, which helps the budget, but you're not making any progress towards that forgiveness finish line during the specific SAVE-related pause.
That's a critical distinction. People really need to know that. Is there any sense of when this particular forbearance might end?
Unfortunately, no. The department hasn't given a clear end date. It seems tied to how the court cases play out, and that's still, up in the air.
Okay. So Save VE is in limbo. Forbearance doesn't count for forgiveness. What about the other IDR plans? You mentioned ICR, IBR, PayYE. Is anything happening there?
Yes, there's some movement there, which is, well, encouraging news. The department has said processing has partially resumed for ICR, IBR, and PayYE.
Partially resumed. Okay, what does partially mean in this context? Who's getting processed?
Right now, it seems they're restarting processing specifically for borrowers who file their taxes as single or married borrowers who report having no income.
So a specific subset of applicants for those plans.
Exactly. If that's your situation, your application for ICR, IBR, or PayE might be moving forward now.
That's good for them. But what about everyone else who applied for those same plans but maybe files jointly or married filing separately with income?
For them, and for everyone else who applied for ICR, IBR, or PayE, the department has given an anticipated timeline. They expect to be fully back to processing all applications for these plans by May 10th, 2025.
May 10th of next year, 2025. That still feels like a ways off.
It does, yes. That's the target date they've announced. And this also applies to people currently in the SAVE forbearance who might have applied to switch to one of these other plans.
Right, because if SEVI gets struck down, they need an alternative to stay on track for forgiveness.
Precisely. The department anticipates being able to process those switch applications by that same May 10th, 2025 date as well.
Okay, but you mentioned processing restarted. Is there still a worry about delays even with things starting up again?
Oh, absolutely. The department has been quite clear about this. They're warning borrowers that significant delays are likely. There's just a huge backlog of applications that piled up during the pause.
Makes sense. Everything stopped, so now there's a mountain to climb. Do they have any estimate for when that backlog might actually be cleared?
Not currently, no. They haven't provided any date for when they expect the loan servicers to get through it all.
And why the delay? Is it just the sheer volume or something else?
It's partly volume, but the main reason cited is that the loan servicing companies, the ones who actually manage our loans, they need to update their computer systems.
Ah, technical stuff.
Yeah, they need to make changes to align with their contracts with the department before they can fully handle processing under these new circumstances or clarifications. It takes time to implement those system updates.
Got it. Okay, let's shift gears slightly to something else that caused quite a bit of confusion. Spousal information. How your spouse impacts your payments on ICR, IBR, and PAYE. What's the final word there?
Right, this is definitely a point of anxiety. Initially, there was some communication that suggested maybe your spouse's income would be counted even if you filed taxes separately or were legally separated.
Which would be a huge deal for people who file separately, specifically to lower their IDR payments.
Right,
Yeah.
exactly. That's often a key financial strategy. So that initial hint caused a lot of concern.
So what's the clarification?
The department has clarified this now. Their expectation, aligning with that May 10th, 2025 date again, is that for ICR, BYE, and IBR plans, if you're married, filing separately, or legally separated,
Yes.
your spouse will be included in your family size calculation.
Okay, family size. That affects the poverty line calculation, so it usually helps lower payments. But what about the actual income?
And that's the key clarification. The department stated that the spouse's income will not be factored into the payment calculation for those filing separately or who are separated.
Okay. So family size, yes. Income, no. For separate filers on ICR, IBR, PYIE, that sounds like a relief compared to the earlier worry.
It certainly seems like it. A change from what was initially indicated, and likely welcome news for many married borrowers using those plans.
Definitely. Okay, so let's say your application for one of these plans, ICR, IBR, PAYE, finally gets to the front of a line. What happens then?
Once the servicer starts actively reviewing your application, you'll likely be placed into something called a processing forbearance.
Another forbearance. Okay, what does this one mean?
This is a temporary pause on payments, specifically while they process your IDR application. It can last for up to 60 days or until the processing is finished, whichever happens first.
60 days max, potentially shorter, and the big question, does this forbearance count towards loan forgiveness?
Here's where it gets specific again. Time spent in this processing forbearance will count toward Public Service Loan Forgiveness Eligibility, PSLF.
Okay, good news for public service folks. That 60-day period still helps them reach their 120 payments.
Correct. However, and this is important, that same processing forbearance period will not count towards the standard IDR forgiveness. You know, the forgiveness you get after 20 or 25 years just by being on the plan itself.
Got it. Counts for PSLF, but not for regular IDR forgiveness. What if they don't finish processing within that 60-day window?
If processing takes longer than 60 days, then you'll be moved from that processing forbearance into a general forbearance.
And a general forbearance. That one sounds less helpful.
Much less helpful for forgiveness purposes. Time in general forbearance does not count toward forgiveness under either IDR or PSLF.
Okay, so you really want that application processed within the 60 days to avoid losing ground on forgiveness, especially if you're not on the PSLF track.
Exactly. That initial 60-day processing forbearance has that specific PSLF benefit, but falling into general forbearance is something to avoid if forgiveness progress is the goal.
Now, speaking of PSLF, there's this thing called the PSLF Buyback option. How does that fit in, especially with all these potential forbearance periods floating around?
Right. The PSLF Buyback program is it's a potential tool specifically for people pursuing public service loan forgiveness. It could allow them to get credit for certain past periods of forbearance or deferment that wouldn't normally qualify.
Like maybe this SV forbearance or a general forbearance if processing took too long?
Potentially, yes. Those are the kinds of periods it might cover, but there are some significant caveats.
Okay, what are the rules?
First, you can only even apply for buyback once you already have 120 months, that's 10 years of employment certified as qualifying for PSLF.
So you have to have the qualifying job time already locked in.
Correct. And second, the period you want to buy back must be a period that, if counted, would actually push you over the 120 payment threshold needed for forgiveness. It's meant to bridge that final gap.
Makes sense. It helps you reach the finish line if you have the work history, but we're short on payments due to a specific non-qualifying period. Any issues with this program right now?
Yes, there's a practical challenge. A lot of borrowers who have applied for the PSLF buyback are reporting very long waits for a decision from the Department of Education. We're talking months with no update.
And the recent announcements didn't give a timeline for those decisions?
Unfortunately, no. There was no specific timeline provided for when borrowers waiting on buyback requests can expect an answer. So that's creating, well, a lot of uncertainty for people close to PSLF.
Wow. It really feels like there are just so many moving pieces here. Keeping track is definitely a job in itself.
It really is. Navigating student loans right now requires staying informed and really understanding how each piece affects your own situation.
Absolutely. And speaking of managing important information securely while you navigate all this complexity, let's circle back quickly to our sponsor, Stonefly.
Right.
They offer that comprehensive range of IT solutions really focused on protecting data. They've got features like air-gapped vaulting and immutability.
Which are really strong defenses against threats like ransomware, right?
Exactly. Whether your data is on premises or in the cloud, like Microsoft Azure. Plus, they support backups for remote workers, which is huge now, and they've been innovating in data storage for a long time.
That focus on reliable protection and accessibility is so relevant. Borrowers need dependable ways to manage their own loan information through all these changes.
Totally agree. Okay, so let's try to wrap this up. Key takeaways for everyone listening.
Let's summarize.
First, the SAFE plan's future is very uncertain. It's likely heading towards being blocked by courts, payments are paused, but that pause doesn't help with forgiveness progress.
Right. Second, processing for the other IDR plans, ICR, IBR, PE, is partially restarted, but full resumption for everyone isn't expected until May 10th, 2025. And expect delays because of the backlog.
Delays are likely, yeah. Third, the spousal info clarification for ICR, IBR, PAYE. Spouse counts for family size, but not their income if you file separately or are separated. That's a key detail.
Very key. Fourth, understand the forbearances. Processing forbearance up to 60 days does count for PSLF, but not IDR forgiveness. General forbearance counts for neither.
And finally, the PSLF buyback option exists, but there are strict eligibility rules and currently long waits for decisions.
That covers the main points, I think. It's definitely complex.
It really is. So the final thought we want to leave you with is this. Given everything we've discussed, the SABI uncertainty, the processing timelines, potential delays, what's the most proactive step you can take right now for your own loan strategy?
Yeah, what makes sense for your specific situation?
Should you be looking harder at switching to ICR, IBR, or PAYE if you are on SAVE? Making sure your income documentation is ready. If you're aiming for PSLF, maybe digging into past forbearance periods to see if buyback could eventually be relevant.
It really requires thinking about your individual circumstances and your ultimate goals with these loans.
Take some time to mull that over. Being proactive is probably the best approach right now.
Definitely wise advice in this landscape.
Well, thanks so much for diving deep with us today. We really hope breaking this down has brought some clarity to a, well, pretty confusing situation.